There are literally thousands of publicly traded companies you can invest in, not to mention the many exchange-traded funds, ETFs, and mutual funds you can buy. So it's not surprising that many investors don't know where to start. And since the market has been going down recently, especially for growth stocks, there are a lot of stocks that are trading for a lot less than they were just 6 months or a year ago. But which stocks should you buy in 2023? Even though I don't have a crystal ball that tells me which stocks will give me the best returns, I've tried to do the next best thing. In this article, I'll talk about 10 stocks that I think could be good investments for long-term investors in 2023. Before we get to the stocks, there are 3 things to keep in mind. Choosing the best stocks to buy today depends a lot on how much money you have. Read our guide on how to invest in stocks to get an idea of where you stand. It shows you how to set up an emergency fund, divide up your assets, and decide when it makes sense to buy stocks. I like to hold on to these stocks for the long term. I have no idea what they're going to do in the coming weeks or months. In fact, most or all of these could go down in the near future if inflation stays high longer than expected or the US goes into a recession. Even though I try to include a variety of things on this list, it's not meant to be a fully diversified portfolio. Instead, they are the long-term stocks I have the most confidence in for 2023 and beyond. Building your portfolio around something like the Vanguard Total World Stock Index Fund ETF is the best way to diversify your holdings in a single step. NYCMKTVT. Let's get to my list of the 10 best stocks to buy now and hold for a long time. I'll list them from smallest market cap to largest, and then tell you why each one is a good buy. Number 1. Pinterest stocks. Pinterest is an island of happiness in a social media world that has become more depressing and divided. Part of the reason for this is that Pinterest is about ideas. When people go to Pinterest, they don't have to think about things, not other people. Pinterest gives people visual ideas for the things they want to do, like building a dream deck, baking a birthday cake for a child, or updating their wardrobe. Pinterest has been hurt by the market decline of 2023, which is mostly because its user base shrank a little as pandemic restrictions were lifted around the world. But based on the company's most recent results, it looks like the number of users has stabilized for now. Plus, Pinterest doesn't have nearly as many users as Facebook, so there's still a lot of room for long-term growth. From a long-term investor's point of view, the most exciting thing is that Pinterest has a huge chance to make money off of its users, especially as the company moves away from its traditional model of focusing on ads and tries to find ways to add e-commerce to its platform. The change makes a lot of sense. People go to Pinterest to look for things they might want to buy, and it just hired e-commerce expert Bill Reddy as its new CEO to help it speed up its pivot. It might take a while for the company to reach its full e-commerce potential, but investors who hold on for the long haul could make a lot of money. When people are already there for suggestions, it's easy to imagine how advertising, lead generation, and product placement could go together smoothly. Internationally, where 80% of its users are but where only a tiny fraction of its revenue comes from, there is a huge amount of money-making potential. Number 2. Block. Block, formerly known as Square, has evolved from a niche payment processing hardware company to a massive financial ecosystem for merchants and individuals. On the merchant side, Block processed about $188 billion in payment volume over the past 4 quarters, and it also offers a suite of adjacent services for businesses. On the individual side, Block has the Cash App, with 47 million users, as well as capabilities that include person-to-person money transfers, direct deposits and debit cards, the ability to buy and sell stocks in Bitcoin, crypto, BTC, and much more. Block also recently acquired music app Tidal, plus the Afterpay Buy Now, Pay Later platform. As its ecosystem evolves, the business should only get stronger. The long-term trend towards cashless payment adoption still has a long way to go, and with many potential growth verticals it could pursue, Block earns a spot on my top 10 best stocks to buy now. Number 3. Etsy stock. Before the COVID-19 pandemic, Etsy was growing nicely by connecting crafty makers with customers looking for something a bit more out of the ordinary than mainstream e-commerce fare. During the pandemic, e-commerce got a huge boost, but Etsy absolutely skyrocketed, growing at more than twice the rate of overall e-commerce. It certainly helped that Etsy was a natural fit when people wanted unique face masks, but its growth has been impressive across all product categories. In the second quarter of 2023, Etsy's marketplace sales volume was up 141% over comparable pre-pandemic levels. As you may notice throughout this list, powerful platforms get my attention. Make no mistake, Etsy is one of them. Few e-commerce companies go head-to-head with Amazon and survive. Etsy not only survived when Amazon rolled out its own handmade items platform, it won. But this could still be the early days of an excellent long-term growth story. Because of its platform and brand strength, Etsy's market opportunity is in the hundreds of billions of dollars and has just started to scratch the surface. And with the stock falling significantly in the recent growth stock downturn, now could be a great time for patient long-term investors to take a closer look. Number 4. Realty Income. There's a solid case to be made that when it comes to value, growth, and income, it's tough to find a more well-rounded stock for long-term investors than Realty Income. If you aren't familiar, Realty Income is a real estate investment trust, or REIT, and primarily invests in freestanding, single-tenant retail properties. Walgreens, NASDAQ WA, Dollar General, NYSE DG, and FedEx, NYSE FDX are just a few examples of the top tenants. Realty Income owns more than 11,000 properties in the US and Europe, most of which are rather recession-resistant and less vulnerable to e-commerce disruption than many other retail businesses. Plus, Realty Income's triple net lease structure helps create a steady, predictable income stream. The proof is in the performance. Since its 1994 NYSE listing, Realty Income has produced 15.1% annualized total returns, handily outperforming the S&P 500. It has paid over 600 consecutive monthly dividends. Current annual yield is about 5% and has increased its payout a staggering 116 times, with no dividend cuts along the way. Number 5. Shopify Stock. Shopify runs a platform that lets businesses of all sizes sell their products online. They focus on giving small businesses the tools they need to succeed in growing with them by building long-term relationships. Shopify has a plan for businesses that starts at $29 per month, and it also has a lot of other services, like payment processing and logistics, that help businesses run smoothly. Shopify is a powerhouse because it makes e-commerce easy by being a one-stop shop. It now has more e-commerce sales going through its ecosystem than any other company except Amazon. But Shopify might just be getting going. Over the past 4 quarters, the platform has made just over $5 billion in revenue. But this is only a small part of its estimated $153 billion, and growing, market opportunity as more retailers focus on online sales. E-commerce is still in its early stages. Less than 15% of all retail sales in the US are done online, and Shopify is number 2, which gives it a big lead over many of the biggest retailers in the world, with shares falling sharply during the recent market downturn because of fears of a recession and signs of a slowdown in consumer spending. Shopify seems like a clear choice for the best stocks to buy in 2023. Number 6. Intuitive Surgical. Robot-assisted surgery beats the shaky hands of humans. That general thesis hasn't changed much from when I first noticed Intuitive Surgical stock in 2005. The Da Vinci surgical system is the clear market leader, and the razors and blades model helps it generate a recurring stream of revenue as its systems are used to perform procedures. Intuitive Surgical is dominant in its space, and it has lots of room to grow as its surgical systems increase in adoption, and the number of its supported procedures increases over time. This is particularly true in many international markets, where the implementation of robot-assisted surgery could be a long-tailed growth catalyst for this excellent business for decades to come. Number 7. Disney Stock. The House of Mouse is the all-weather tires of a portfolio. The pandemic hurt its theme park and movie businesses, but helped the Disney Plus streaming service, which has grown into a powerhouse years earlier than Disney expected. In fact, Disney Plus now has over 150 million subscribers, less than 3 years after launching, while the company's initial 5-year goal called for 60 to 90 million. In 2022, demand for Disney's theme parks and movies is coming back stronger than ever. In fact, revenue is now greater than in comparable pre-pandemic times in Disney's parks due to initiatives that have driven higher per-guest spending. On the streaming side, Disney Plus has been a massive success, and the company is rightly focusing on expanding it and the company's other streaming platforms, Hulu and ESPN+. Disney might even be the ultimate combination of a reopening play and a pandemic-fueled growth business. Its amazing stable of intellectual property, Marvel Cinematic Universe /Star Wars /ESPN /Pixar /Disney, and Cash Machine theme park business gives it a margin of safety that makes it perhaps the safest stock on this list. And it still has tremendous growth potential as the newer areas of its business evolve. Number 8. Berkshire Hathaway. Most of the stocks on this list are growth stocks, but this one is the most boring value pick. Berkshire Hathaway owns about 60 subsidiary companies, some of which are well-known brands like Geico, Duracell, and Dairy Queen, to name just a few. Berkshire also owns a portfolio of common stocks worth more than $340 billion. This portfolio includes huge stakes in Apple, Nasdaq AAPL, Bank of America, NYSE, Chevron, NYSE CVX, American Express, NYSE EXP, and Coca-Cola, NYSE Co., as well as positions in dozens of other companies. Many of these companies were chosen by legendary investor Warren Buffett, who at age 92 still manages most of Berkshire's investments. Buffett's critics will say that he has lost his fastball, but Berkshire still beats the market most years even though it is so big. Even though Berkshire won't make as much money as it has since Buffett took over, there's no reason to think it won't continue to do better than the S&P 500 for the foreseeable future. Berkshire would be the largest actively managed mutual fund in the world if it were a mutual fund. Buffett will not always be in charge, but Berkshire is his legacy, and he has been protecting it from stress for years to make sure it will be in good shape after he's no longer in charge. He has shown his faith by buying back shares with his business partner Charlie Munger. That's a good sign for long-term investors like us who have patience. Number 9. Amazon stock. Most people don't think Amazon needs much of a pitch to get their attention. The company has a big lead in the U.S. e-commerce market, with about $600 billion in gross merchandise sales last year, and its Amazon Web Services cloud platform is also a market leader. But there is more room for growth than you might think. We are still a long way from making the most of e-commerce. It still makes up less than 15% of all retail sales in the U.S. The cloud business is also not very old. Amazon also has a lot of potential in other areas, like healthcare, grocery stores, neighborhood markets, and more. Number 10. Mercado Libre stock. One of my favorite long-term stock investments in the market. Mercado Libre is often referred to as the Amazon of Latin America, and for good reason. The company operates an e-commerce marketplace that has a dominant presence in some of the most populous nations in the region, including Brazil and Argentina. However, there's a lot more to Mercado Libre. It operates a fast-growing payments platform called Mercado Pago, a logistics service known as Mercado Envios, a business lending platform, and more. The marketplace saw $8.6 billion in merchandise volume the second quarter of 2022, and Mercado Pago processed more than $120 billion in annualized volume, with about two-thirds coming from outside the company's e-commerce platform. Both are growing rapidly. And don't overlook Mercado Crédito, the company's young but fast-growing lending business. Mercado Crédito has more than tripled in size over the past year alone and has $2.7 billion of outstanding loan balances. The best part is that all of these businesses are in the relatively early stages. Mercado Libre's merchandise volume is roughly 6% of Amazon's, and its Mercado Pago payment volume is less than 10% of what PayPal, Nasdaq PYPL processes. So there's a ton of runway ahead. Mercado Libre isn't just the Amazon of Latin America. It's the Amazon, PayPal, Square, Shopify, and more, all rolled into one, and it's at a much earlier stage of growth. As the e-commerce and fintech landscape in Latin America evolves over the coming years, Mercado Libre could be a major long-term beneficiary. Last things to know about using this stock list. If you're new to investing or just want to make sure you're not crazy, please read our guide on how to invest in stocks. It covers everything from how to get started to how to figure out your own investing strategy to how much of your money to put into stocks. Even though I'm optimistic about each of these stocks and think they're good buys right now, they might not be the best choices for investors who don't yet have established and diversified portfolios. If you are just starting out, you should also check out the 15 best stocks for beginners. I'm sure that the 10 stocks we talked about here are among the best long-term investments you can make right now. But it's best to start with the stocks that speak to you and ignore the ones that don't. Good luck!